Hi everyone, I hope you all had a great weekend. I'm making the video a little late this weekend because really there isn't a whole lot for us to go over. Our overall market model remains under a sell condition. Nothing has changed the past three sessions to move us into neutral or buy. And one hint that we may get that we're not going to run right here is that following the gap up in the morning, as you can see in the NASDAQ especially, and the New York Stock Exchange with that reverse wick. It looks like a candle, actually, if you wanted to light the wick of a candle. Overall, the market could not hold on to the gains. It started to produce intraday and finished well off the highs in the Russell 2000 and the NASDAQ, which are your leading indexes, or the indexes you want to see lead on the upside. And as you can see, if you look at our oscillators, while TSV, I know it's hard to see, but you can still see the blue line barely turning up here in the NASDAQ. While it's turning up, the overall trend is down, and while you see right here MACD, it's just still running towards the floor. And on a weekly, as you can see, we're still coming off overbought conditions, so there's no way that we've really washed out the weak hands here. And like I said, some people were saying, oh, isn't Friday a fall through day? Volume, first off, is lower than the session before on the NASDAQ. New York Stock Exchange, while volume is higher and it's up 1.25%, follow through days leave no doubts in the mind that we want to rally. It's a powerful rally. Like you get a follow through day, you're going to close near the highs, you're going to hold the gap up, and you're going to have a strong intraday session, and you will have signals. Friday, zero signals, zero add signals, zero long signals, but at the other good end, zero sell signals. So while we have had nothing to do this weekend, still we were on the lookout and nothing appeared on the long side. Plus, volume is climatic on this downturn, but there's no huge like volume spike that indicates a washout. The NASDAQ, it does, but it didn't happen in the overall market. You normally see it in every index. So I would say that we're going to continue to have a choppy market here. I don't know if we head straight back lower, but all I can tell you is that the NAIIM bull exposure index hit 9%. That's basically lows that you see near the end of a market pullback. Investors Intelligence bulls came down to around 30%. That's normally where you see lows in a pullback. And the VIX hit 30. That's good. The put call hit 1.5. That's good. But some of the other things, you didn't really see the bears show up. So really there's nobody bearish. The Investors Intelligence survey is still 17% bears. Normally you want to see that get around 30-40%. And actually the best bottoms, you have more bears than bulls in the Investors Intelligence survey. The AAII bulls actually somehow managed to increase both last week or the week before and last week. So there really is no capitulation there. And then also the VIX, while it did hit 30, I want to remind everyone, back whenever we actually had real lows in 2008, the VIX actually almost hit 90. So we're really not seeing extreme fear levels. So it doesn't just, with the lack of bears, even though bulls are coming in, with the lack of people that are actually outright bearish on this market, it just seems, and with all the dip buying, I mean the amount of questions I'm fielding on StockTwits and Twitter of people buying stocks. I know this one woman that just can't stop buying Guild. This is in a disgusting chart pattern, and hopefully it doesn't roll over on her, but I would never be buying this. And for instance, some of the stocks that I did like, it signals that I wanted to pay attention to. Facebook, whenever you look at it on an arithmetic chart, you can see that there's a lot of base building left to go, and there's only a few stocks that I'm personally flagging. And if you look at VRTX, does this look round at all to you? This looks round. That at the end looked round. But if this is even going to become a buy, this thing's going to have to work on basing out here at the 50-day moving average just like it did last time, and then start to move up. But buying it here would be very dangerous. But VRTX is one of only a few stocks that I flagged that I was even interested in after Friday. Facebook is another one, but I would never buy this move back above the 50-day moving average without having a fall through day or having the market have closed higher on Friday across the board near the highs. So Facebook isn't even an option. VRTX needs more work. RCPT is like VRTX. VRTX is in the perfect speculator scan. RCPT is in the perfect speculator scan. But I wouldn't buy this move. As you can see, it's kind of getting a little V-ish. We'll go back to that arithmetic chart. And as you can see here, it already has been a choppy stock, but even if this thing is going to move higher here, we would want to see this thing kind of calm down from these choppy up and down moves and all these wicks you see at the top, meaning that it's failing to close at the highs. Anytime it tries to break out, it just fails to break out below the highs. So until we would actually, let's say that we do get a fall through day now, but now RCPT is still vasing. Now it's going to have to either bounce off the 50-day moving average in heavy volume, produce a pocket pivot point signal, and or we would have to set buy stops just above the 65.77 level and the 67.35 level, because you'd only want to get it on a breakout just because of how choppy it is. But if it can continue to consolidate sideways and we get a fall through day, this is an excellent one, and so is VRTX. And one of the best overall patterns out there is AAP. If you look at it longer term, it's still very tight. If you compare it to its previous consolidation patterns, it's just as tight as before. And while we're going into earnings season, all this stuff is scary. But if it would have produced like a huge volume pocket pivot point signal, and let's say BOP would have been positive on Friday's move with that TSV and MACD line, I definitely would have tried at least a 2% position in the stock. As it is, we have nothing going into Monday morning. Remember, this upcoming week is historically, seasonally, going back to 1950, the second worst week of the year in the stock market. And October 20th is on a Monday. And if you buy and hold stocks for a 5-day period on October 20th, that is also the second worst weekly 5-day period for the stock market. So seasonality is against us majorly in this upcoming week, so be very careful if you decide to play the long side. That being said, at the end of this second worst week historically and seasonally going back to 1950, we then launch into the most bullish period for stocks. We'll see if it happens this time around. With all the damage out there, it seems very hard to believe that we're going to get a repeat of seasonal history, but we're supposed to have now, after this week, stocks should trend higher going into year end based on data going back to 1950. But this year it's a little different, as we have a little bit of a different situation setting up in the indexes. But the main thing still is cash is king. Unless you're day trading, then go after these Lake, APT, IBIO. Look at this thing break out. This thing will eventually top too, so this isn't the next one to watch. But all these short patterns, VSR, look at how well they paid off in 2 days. Lake down 28, VSR down 35, APT down 33. There's a lot of money to be made intraday playing these Ebola plays still, as it's still in the news. Thank you.